How to build generational wealth according to Warren Buffett. The rags to riches story might sound too good to be true, but in Warren Buffett's case, he actually went from selling newspapers to becoming one of the richest men in the world, and here's how he did it. Invest and wait. Warren Buffett is not really a founder, but an investor, and he has grown his assets more than 100 times just by investing them wisely. Buffett never really sells the stocks as soon as they start to go down. He basically buys the stocks of a company with a lot of potential, and then he forgets about them. After a decade or two, these stocks make him millions of dollars, like Coca-Cola or Apple. He once revealed that after years of investing, all he could suggest to others is don't be impatient with the stocks. So, if you've invested in something, don't keep checking on it every minute of the day. Instead, just leave it for a couple of years and see if its value is increasing. This is when you'll know that you've hit the jackpot. But for that, it's important that you have a keen eye of identifying the stocks that could actually get you mad profit, while avoiding companies that are going to sink with all your money. Don't diversify just for a safety net. Most investors think that diversifying their investment portfolio will actually prevent them from losing all their money because of one bad stock. But that's not what Warren Buffett thinks. According to him, you should only start investing if you really know what you're doing. And if you really know, then you won't need a safety net. Warren once said that diversifying your portfolio just means you're seeking protection against your own ignorance. It just shows that you're not confident enough in the stocks you've already picked. It makes no sense to invest in a whole load of companies just to be on the safe side. If you are really a good investor, you'll do your homework and pick a few companies that have a lot of potential and invest in them. You don't really need a safety net, to be fair. Even when Elon Musk started pouring all of his money on SpaceX, he didn't have a safety net or a different option, but he knew his plan was going to work. In the same way, diversifying your portfolio for the purpose of protection is simply doubting your own intuition. But if you're diversifying it for the sake of more profits or to expand your investment portfolio, then go for it. Invest in the company, not the stocks. According to Warren Buffett, stocks are just numbers on a screen and they could actually fool you pretty easily. So it's better that you invest in the company instead of investing on a graph that goes up and down. What it means is that you need to closely study the business you want to invest in. Once you really know the business, it would be easier for you to predict realistic profits in the near future. You also need to see if the business is here to stay for a long time, or is it just a passing cloud like Radio Shack? That blew up in the beginning and is nowhere to be found now. Buffett once said that Berkshire Hathaway became so successful because he didn't rely on the stocks, but saw the business opportunities of the company. He invested in the business and made Berkshire Hathaway the biggest investment firm ever. Invest in your skills. You can only build generational wealth like Warren Buffett if you have confidence in your own skills. Even Warren, the man who basically ruled over the stock market, went back to Omaha and did a course on public speaking. Although he was a very successful stockbroker by then, he still got enrolled in the Dale Carnegie course so that he could better communicate in business dealings. And Warren advises other people to do the same. You can't possibly become a billionaire with bad communication or no idea of the stock market. Just identify the point where you really lack, and then start working on it. You can take courses, enroll in college, or even attend workshops to improve yourself. The thing you really need to know is that you can't just put learning on the back burner for long-term success. Spend less than what you make. You can't expect to build generational wealth if you're not watching your expenses. You obviously need to control how you spend your money so you increase your savings, invest more, and eventually become a billionaire. At least that's what Warren Buffett says. Although the investment mogul himself has spent billions of dollars on a ketchup company, he doesn't really use a lot of the money for himself. He likes to watch each and every expense of the companies he's investing in. His control over the spendings goes so far that some people even call him stingy. When the billionaire became a father, he didn't even buy a new crib for his baby, and just turned the drawer into a crib. For his second child, he borrowed the crib from one of his friends, although he had all the money in the world. He used to drive around in a very worn-out car until his wife pressured him to buy a Cadillac. So Warren believes in saving as much money as possible and not even letting a penny go unaccounted for. Focus on high value and low price. Warren Buffett initially started investing in stocks that were really low cost or businesses that were on the verge of bankruptcy. Most investors called him a fool, but he knew that in the long run, these businesses are going to make him a billionaire. He didn't invest in stocks that were worth thousands of dollars. Even a seasoned investor like Warren started from investing a modest amount on very low-cost stocks, and then he waited, not for a year or two, but for several decades. Warren always keeps an eye on high-value companies, and when these companies are at their lowest, he invests in them and waits for their price to increase. By repeating the same process hundreds of times, Warren has become the investor that we all know and love. Avoid debt at all cost. Most people might advise you that it's better to take debt than to sell your stocks, but it's not really the case. Warren believes that once you take debt, you're stuck for life. Warren thinks that most investors fail solely because they take debt without knowing anything about the consequences. Buffett believes that if you're bound to be a billionaire, you'll get there without having to borrow money from banks. He's also particularly hostile towards credit card companies because of their high interest rates. He once went as far as saying that if he ever took a credit card loan with an interest rate of 18 to 20%, he'll be broke by now. So it's better to steer clear of all the debt in the beginning of your investment career if you want to build generational wealth. Have a long-term plan. Generational wealth can't be built overnight. Even the person who created the internet didn't know at one point how his idea was going to blow up. So you have doubts. It's all right. But make sure you also have a foolproof financial plan that extends to several decades. Warren Buffett didn't invest in Berkshire Hathaway at its peak. The company was practically bankrupt, and Warren put a lot of money in it because he knew it was going to be his golden hen in the upcoming decades. Just think about where you would want to be 10 years from now. Thinking about it will help you envision what you're really doing with your life. Then, make a long-term plan and see where your investment portfolio will be 2 decades later. Long-term planning will help you create more realistic goals and stick to the basics. Invest in index fund. If you're a beginner in the investing world, you don't really have to put all your money on a business and wait for it to make you a billionaire. The safest way for you to play is index funds. Even Warren Buffett advises new investors to put their money on an index fund where you can invest in multiple big companies. This way, you don't have to pick the stocks or restrict yourself to a particular industry. Index fund will not only diversify your portfolio, but will also avoid major risk of losing all your money. Warren thinks that people investing in index fund can sometimes defeat even the most seasoned investors in profits because they're not putting all their eggs in one basket. Don't lose your money. Warren Buffett often says that the only way you can build generational wealth is to never lose money. There is a lot of risk involved with investment, and you can't really avoid losing money always, can you? So what you can do is make sure that you make up for that lost money. You can check out the returns of your other investments and see if it's actually worth the risk. If your loss is getting out of hand, you can simply reevaluate your investment or see what you're doing wrong. So what do you think about generational wealth? And what's the easiest way to get it? Share your thoughts with us in the comments. Also, don't forget to like this video, subscribe to our channel, and hit the bell icon to get the latest updates. Take care, and thanks for watching.